Svein, thank you so much for taking the time to join the podcast. I really appreciate it.
Of course, it's a pleasure to be invited and given this opportunity.
So let's dive right into the markets. Any interesting learnings or lessons so far in 2025? Seems like it's going to be a bit of an unpredictable year.
Well, shipping has always been infested with geopolitics, and maybe tankers more than any other sector, especially because we transport oil, right? And oil tends to be produced in, at least in most of the countries, in areas where there's been more conflicts typically, right? So this has sort of driven a lot of changes in our industry. I think now things are happening at a different speed than maybe what we've seen in the past, and there's more big issues at hand at the same time. So it's very, I would say, interesting is a little bit of a neutral adjective sometimes. It is interesting from an intellectual perspective. It's also very challenging to have a clear idea on where we're heading. So I think as a shipping executive to answer a question as what is 2025 going to be like, it's an impossible question to answer. And I think if you have an executive, no disrespect to other executives, but if you have an executive who with confidence tell you how things are going to play out in 2025, I would be a bit concerned because in my humble view, it's basically impossible now. So.
Does that mean that, doing a bunch of forecasting and predictions is really just a waste of time? Or do you do that to have scenarios clear in your mind and then act on scenarios playing out?
I think we don't spend so much time on forecasting. We don't budget revenues, for instance. We focus on what we can control. So the most important thing for us is to have a understanding and respect for how this market operates over time. And it's a very cyclical industry, as you well know, and it's volatile at times and can be brutal in both directions. So our idea from the get-go is really to structure the business so that you can stay through all these cycles and hopefully also capture the opportunities that the different times will present to you. And in this is to have a very robust balance sheet, so i.e. very little debt, and with low break-even levels or robust break-even levels that gives you sort of staying power. And this gives you the opportunity or ability to really maneuver the business through all these challenges and also then capture the opportunities. Of course, it helps to have a little bit of an understanding what is an opportunity and what is not, and things like that. But that is, I think, our focus, and then the market will deliver what it will deliver. That sounds a little bit maybe arrogant. I don't mean it that way, but that's the simple starting point for us.
Yeah. So when looking at tankers, there's two sides of the equation. It's the supply side and the demand side, of course. And I think you have said in earning calls and in your presentation that the good thing here is that it's mainly a supply story, or at least we have that for a fact that the supply side look good. Can you sort of break down the narrative surrounding tankers and why you believe maybe it's just a bit boring story, but boring in a good way ahead?
I wouldn't say it's boring, but I would say that the demand side is the most difficult part to analyze. Oil demand historically, for the last few decades grow about 1.5% per year. So it's exceptions are financial crisis, COVID, you had sort of some disruptions. But so demand side is not, going crazy like you had in other shipping sectors from time to time. But what is happening now is that people have had over the last few years, or several years, I would say, less confidence in the tanker sector for a variety of reasons, which I can allude to. And that has held back investments. And because it's been underinvested in a way, especially for VLCCs that we operate for the last few years, then the order book for new ships is very benign, and the ship is very fast becoming very old. So this is why my statement now on my recent call was that the story for our equity now is, increasingly becoming a very robust supply story, but it's not a disregard for the demand side. So what really changes in demand is that you can imagine that we transport supply of oil, not necessarily demand. So in a phase where oil inventories are being built up by the refiners, that means that we transport more than what's being consumed, and that is good for our business. In the reverse of that, when they are drawing on inventories, we transport less than is consumed, and that is normally not so good for tankers. And these sort of dynamics, they amplify the swings, if you like, or the cyclicality of the business. So you need to keep a close eye on demand, and China has become the biggest importer of oil. And as we've seen now the last few years after COVID, China has not really gotten out of the blocks yet, in their recovery. And this has been a bit of a sort of muted market in a way. But despite that, the last 2.5 years or so, I would say we made, average pretty much $50,000 a day, which is well above historical average. So it's not been a weak market, but it's been less fantastic or less good to some of the other sectors. So we're not disappointed in itself, but maybe a little bit annoyed that the smaller ships made more money than our big ships. So, but it's becoming increasingly a very attractive supply story, and it's a bit difficult to destroy it because the big yards that build large tankers, they are very active in building a lot of ships, container ships, large container ships, LNG carriers, petroleum, LPG carriers, on other types of equipment. So if you go to a shipyard today, it will take quite a long time to get new supply delivered. And at the same time, the ships in the water today are getting very quickly older. So I think this is, creating a very interesting opportunity. And I experience also increasingly that our customers are becoming aligned with this view. Of course, they have a little bit of a different agenda because they're going to pay for the freight, so they want the freight to be, lower than maybe what a ship owner wants, which is, normal in business. But they are, I think, a bit concerned about the fleet now is going to shrink at a time when oil demand is still growing. And this is a dynamic that we find quite exciting. So,
very interesting. So looking at, if ask a question of how tight is the order book really, just adding on, of course, few investments, but the older vessels, because of sanctions and shadow fleet, seems to maybe, be very strong, and it doesn't seem like we're going to have a lot of recycling anytime soon. Is that sort of like adjusting a bit the supply story, that these older vessels stay out there longer because of the geopolitical stuff and everything going around there?
So there's many sort of pieces to this puzzle. So if we look at sort of the basics first, which is just looking at the age profile of the fleet in itself. So by end of next year, i.e. end of 26, some 20% of the fleet will be older than 20 years of age. And, 450 ships almost, which is close to 50% of the fleet, will be older than 15. So that in itself paints, a very, interesting scenario that the ships are fast becoming older. You can argue maybe ships will trade longer than what they have done historically. But, oil companies and terminals and whatnot in general are quite strict when it comes to approving vessels and using vessels. So it's not sort of so easy to take, the older spectrum of the fleet into the regular business. Now, in this context, a meaningful portion of this old fleet is in what people refer to as the shadow fleet. And part of the shadow fleet is now sanctioned by OFAC, Office of Foreign Control in the United States. So it's making it very difficult for these ships to operate and doing conventional business. They are in a way serving a purpose because they transport oil for people that can use these ships, but they can rarely load directly at terminals, and also in particular rarely discharge at terminals because the ships are in such condition and under such a history that people cannot touch them. So there's a lot of offshore transshipment of oil. So ships meet and go alongside each other in international waters, and they transship oil from one ship to another, and do that maybe once or twice. And then they change the identity of the oil along the way. So we'll get to that later. But this means now we estimate roughly 140 VLCCs being sort of in that part of the fleet. But this is included in the older fleet. So we should be aware not to double count. But of course, then we have said many times now that this fleet is shrinking fast. And to your question about demolition and scrapping, this shadow trade, has paid phenomenal freight rates, because oil that was sanctioned had to be sold at a discount for a buyer to accept it, and then they had to pay a significant premium to owners of old ships for them to freight sanctioned oil. So some of these ships have made, tons of money in transporting some of this oil. And that, of course, have held people back from scrapping ships, because it's been, financially very rewarding to keep the ships in the business. We sense now that things are tightening, and the new guy in the White House is, following up on what Biden started in his last innings, and is becoming even more tighter. So it will just make it more difficult to use all this equipment. So this will, put more pressure on the supply side and make it more difficult for people to find alternatives than to go to, good ship owners like, a DHT type of company. So.
I think you made an excellent point in a panel talking about, alternative fuels becoming more green. And then I think you raised the topic that if we just made it more easy to recycle these ships to avoid disastrous, accidents happening, that would be a very good initiative to get our hands on.
Absolutely. So I think there's a chance now we will end up with many ships that will be untradeable, that have been involved in some of these businesses that I just described. And we will not know who owns these ships, and they might not be insured. And they might be left somewhere with the anchor dropped and the key in the ignition and no crew. And this is an environmental disaster. So something has to be facilitated to get rid of these ships. So maybe one can, have waivers for scrapyards in the Indian subcontinent, Bangladesh, etc., to demolish these ships, and the yards not being afraid that they are, demolishing a sanctioned asset or buying a sanctioned asset. Maybe the World Bank has to step in, or things like this. It has to be a global effort. And maybe, when people put all these sanctions in place, they didn't sort of think so many steps forward. What will be the end game of this? And but it's going to be a big challenge, and it has to be dealt with. And this is maybe, I think, in the near term, more important than trying to figure out if we're going to change a different type of fuel. So.
Yeah, I think that's an excellent point. So looking at demand side, and we could probably spend a whole hour thinking about, Trump economics, Iran, China stimulus, but do you have any key topics in those segments that you find interesting? It seems like Trump's going to keep pressuring Iran. Is that like the big story now, or is China the biggest one on the demand side?
I think on the demand side, it's sort of three areas. It's China and Iran, as you allude to, but also Russia in a way. But as I said initially, I find it just impossible to have a clear view on especially Russia and Iran, exactly how things will play out. You can, of course, draw up some scenarios and what will be a likely outcome under certain assumptions. What has disrupted a lot of trades over the last 3 years is when Russia then entered into the conflict with Ukraine, or the war. And the consequence of this is that the Russia used to supply, in particular Europe, with oil out of the Baltic Sea and out of the Black Sea. This oil was not acceptable to Europeans anymore, so it got directed to Asia, and still on smaller ships, because VLCCs cannot go to the Baltic and the Black Sea. If for some reason, you now get a resolution to the conflict, I think what matters is how is the resolution, coming or being put in place, and is it sort of internationally recognized? So, for instance, now we've seen recently that the US are now in direct discussions with Russia to try to, negotiate some sort of a peace treaty or an end to the war. But if Europe is not part of this, I don't think it's necessarily an automatic consequence that Europe will then start again to buy Russian oil. So maybe this will still be disrupted for a while. If Europe suddenly were, part of this and say, okay, we will lift sanctions on Russia and we'll start to buy Russian oil again, that will change trade dramatically and back to where we were pre-conflict, and which will be great for VLCCs. So, because then some of this Atlantic oil that is now going to Europe will then start to go to Asia again. So that's maybe a perfect scenario. I think any sort of agreement that could be reached between these countries, it will take time for things to be implemented and approved and agreed to and whatnot. So we just need to follow what's going on. But all this news is improving the sentiment in a way that the sentiment you can feel in the market. It's very sensitive to small things, and now we are in the middle of February. And since the new year, we had 3 spikes in the freight rate already. And a third one happening now. So it moves very fast and on small things. And it also suggests, I think, that the underlying balance between supply and demand is so finely tuned. It doesn't take anything really to move the market dramatically. And this is where I think our customer base is, they're paying attention to this, and they need to think about, who are we going to partner with to transport our oil and work with long-term, with contracts and secure ships.
Yeah. How do you balance then, risk reward in fixing contracts versus being on the spot market? Is that a constant evaluation, or how does that look when you have the market perspective with you?
Yeah, it's a common question we get, and it's a very good question. We don't have a fixed percentage. We look more at the money. So when we think sort of rates are for term business is rewarding, we tend to be a bit more keen to take on more time charters. Or of course, if we are concerned about moving into a softer period, we will also be more interested in securing some more fixed income. So it's a bit of a dynamic process. I would say it's maybe more an art than a science, although there are some numbers to it. We have a great trading team, and the head of our commercial operations is truly the best guy out there. So I think history tells us, our track record, that we've made some good decisions in the past, and it's a constant discussion, and also involvement with customers. We have a strong customer focus, and we are sort of doing business with people that also tend to engage in term business. So we are in general being presented opportunities and have good discussions with the customers to engage in contracts.
So does that mean that you sometimes have to trust your intuition and in shipping, that you can't only rely on the data, that experience gives you this sort of intuition as well that plays into shipping? Because like you said, maybe it's a bit of an art to know.
Yeah, I think intuition is part of it, but it's a smallish part of it. So, it's, of course, it's numbers and data on the general market balance or imbalance, geopolitical developments. But of course, to capture all of this and try to jam it into a spreadsheet, I think it's a task with a very high probability of giving you the wrong answer. So it is, that's why I'm saying it's a bit of an art, but it's an art, which is executed with some very qualified people, experienced people. So I think we have a very good team of people in general in the company. And our track record suggests that we've done this quite well. But you asked me also about other areas. I mentioned some comments on Russia. The new president, of course, has been quite loud in what he wants to do with Iran, or how he wants to deal with Iran, and he's used the word maximum pressure. So again, the outcome here in detail is very hard. I think broadly you can look at 2 sort of broad choices, and it could be a mix, or all these 2 things. So one, I think, is that if there is maximum pressure in trying to deprive Iran of their sort of financial benefits of selling oil, so that oil production dramatically goes down, there's a need for that oil in the market. So somebody will have to replace that supply of oil. And I think the sort of easiest way to do that is for Saudi Arabia and UAE or other OPEC members to step in. And that oil will be a compliant service, so it will be for companies like us to do that, and it will park some of the shadow fleet that cannot do this business. So the net effect of that will be positive. I think the other, maybe an extreme scenario, is that you read sort of geopolitical analysis suggesting that the United States' ambition is to achieve a regime change in Iran, and I have no opinion on that, and not qualified to comment on it, but I just read that. And I think if, Iran now is based on Iran now maybe being in a weaker position than it has been for a very long time. So if they want to seize what is described as an opportunity, the result of that could be, of course, that Iran's oil suddenly is not sanctioned anymore. And then they can access the compliant market and use ships like DHT, which they have done in the past. So in my career in DHT, on 2 prior occasions where Iran oil has not been sanctioned, we have transported Iranian oil. So that again will be a benefit for us. So I think, in those 2 extreme scenarios, there's reason to be optimistic that this will be a positive, for our business.
And what is the worst case scenario from a market perspective?
In general, it's sort of that the economy is, coming to a halt in a way. So economic growth is not there. So of course, all these talks about tariffs, will that stop or reduce or hamper trade? Will it create inflation? Things like this that will, hurt the global economy. That in general, of course, is not good news. And oil and tankers, it's a true global business and commodity. So it's an economy that is a commodity that will be hurt if you get really a recession or a big sort of reduction. So there's the green shift, of course. I've been on the view for quite a long time that the green shift will take a long time. And I know there are ambitions out there, and maybe people with ambitions think that I'm sort of talking against them. I'm not. I'm trying to be realistic on behalf of DHT. And we are not mandated by our investors to be a first mover, to invest in R&D for green technologies. We try to educate ourselves. I think we know a lot about what the opportunities or alternatives are. But we made the choice to be a rather fast follower if things become proven. But if we now suddenly end up with some new radical technology being developed or approved that will change shipping, then it's hard to know how that will play out. I just think it's going to take a long time. And say for alternative fuels, we can talk about ammonia for one, right? So green ammonia. Or let me take a step back. So in 2023, we engaged 2 of the world's leading energy research firms to help us to learn something about, the oil demand in the longer term. So we wanted to understand, when can we likely expect peak demand to come and how will it play out? And the second scope we gave these firms was to learn more about alternative fuels. And we gave these 2 firms the same scopes, but they were not aware of each other. So they work in parallel for 10 months to present their papers to us. So then let's talk about alternative fuels. So we were not sort of keen here eager to learn the technical use of the fuel because our people know that. We wanted to know where is CapEx being employed to build production facilities for, say, green ammonia or blue methanol. We wanted to know what are the costs of these plants, because that will give you a brief idea of the cost of the output, the fuel that's going to come to the market. And then we wanted to know geographically where they will be located and how they plan to deliver these products to the market. And our findings really, when they presented these to us, they were highly aligned. I would say, 90-95% aligned on the data and on the conclusions, which made it, of course, more credible. And to us, it was clear that for large tankers that we operate, we are probably going to be the last frontier to be able to, venture into this. And I'll get back to some of the economics with that, but I think it's the low-hanging fruit is smaller ships that operate maybe, near sea coastal operations closer to where people live, where, emissions are maybe, more important, that you constrain those or reduce or remove them entirely. So that's sort of the easiest way to do it, where you can fuel quite often. Because the challenge with a fuel like ammonia is the energy content is just a quarter of what we do today. If you think of a VLCC, it's say our ships are mostly 320,000 tons. And we typically bunker the fuel that we consume, maybe 6,000 tons, to execute long voyages. If you were to do this with ammonia, you're looking at bunker tanks that maybe 4 times the size. Huge. So you would either have to have many petrol stations along the way in open sea that you can refuel, which I think is a unrealistic proposition. You can reduce the cargo size, of course, or you can build a bigger ship. And I think, frankly, it's, nobody should expect this to happen in the next 10, 15 years, right? So, but there's so many other areas in shipping where you can do things, and I know there's a lot of good things being done. But if you look at then, lastly, the transporting oil, crude oil with VLCCs is the most efficient form of transportation you can find on the planet today. The energy used per unit transported is by far the most efficient and competitive. So the market should, accept that this is already a very efficient way of transporting oil. Let's focus on all the low-hanging fruits, and maybe eventually down the road there will be also change in our business. But I think in the near term it will not happen. And this is also, I think, one of the reasons why people have been holding back a bit from investing. They've been uncertain about, will there be a change to our business or our fuel? So
yeah, that's a great, summary, and probably also ties into, when push comes to shoves, energy security tends to be more important.
Yes.
Seems like it.
Well, you need to have an alternative, right? I think in the near term, if we are to achieve something significant to reduce or curb emissions, we need to reduce our living standard. And I think it's going to be very hard for, say, politicians in the Western world that are up for election every 4 or 5 years to go to their, communities and say, we're going to fix this emission problem for you. But the only way to do that is that you need to reduce your living standard, so please vote for me. I think the system is not going to happen, right? And at the same time, you have to go to the developing world and tell them that they need to curb their ambitions to reach the living standard of the Western world. So it's, the only way really this can happen over time, I think, is that there is some significant technological steps that can be taken in real inventions, right, on new ways to have energy. And
would that be nuclear, or is it too difficult to understand, or something like that? And
I think from a populistic view, it's very hard to accept and understand because historically there's been some nuclear, seriously big accidents. I'm not a engineer and don't know enough about this, but there are some new modular systems being developed. They are now implemented onshore. Say, so small towns can get a small nuclear reactor, right? Implemented quite quickly, and of course it's very cheap power. But to get it on ships, thousands of ships, where you lose control of maintenance and quality and security and have this sort of floating around going to ports, I think I have a hard time to think that that's going to be accepted in the short term. And we had discussions with one company that I guess is the leader in developing this for the maritime space. Also to understand a bit the potential capex, what is the cost of installing this on a VLCC? I wanted to, I'm a curious guy, so I wanted to figure out what can we expect. And this conversation is maybe 4 or 5 years back, 4 years back. And so I'm not going to hold this company to this, but and they're not named, but just to put things in context. So at the time, when we had this discussion, it would cost $9,500 million to build a VLCC, which of course would include a general combustion engine. So if you wanted to apply this fuel system of modular nuclear, it was a capex of about $165 million on top of this. Of course, you can strip out the combustion engine, so the 90-100 becomes maybe 70 or something like that, or 65. But essentially what you're doing as a ship owner, you are paying upfront for the fuel cost for 20-25 years. You're taking all that cost up front. whereby, you know, for other modes of transportation, the trade and the business and the customers essentially are paying for that fuel cost through a provided service. So to take all that cost up front, I think it's a proposition that is very hard to make real, right? And so maybe I'm a bit of a cynical guy. I don't mean to be, but I think it's fair to ask some critical questions to understand what are the implications of this, right? Not just look at the invention, but so if we can solve some of these things, maybe, but yeah.
It's fascinating, but sometimes, you know, technology has a way of suddenly there's a discovery, and then it's hard to predict, right?
Of course. So if we knew the answer, you know, we would deliver it to you. So
stepping, you know, going one step back, or maybe 2 and 3, the story behind DHT, the vision of the company, the way you entered it. Now we have spent a lot of time talking about the market, so I understand that we can't take the full story here, but just for context, people are tuning in because it's in my opinion, a very great story of a company who has, you know, been able to deliver and become a very respectable tanker company. But I know there's been several steps along the way, but how would you like to share, you know, the company history and how you got involved?
Sure, that's a good, interesting question. So I've been in this business for 35 years. And DHT was founded in 2005, and not by me. It was founded by a US public listed company called Overseas Shipholding Group, which later filed for bankruptcy. But they wanted to build up a leasing company, maybe not too dissimilar to what Frontline did when they built up ship finance. So they created this vehicle, dropped down 7 ships into the company and listed it in New York. And I think at the time they owned 40% of the company. All the ships were operated by OSG and they were on charter back to OSG. And it was sort of an all payout model. So it was a base rate with fixed income for the company plus some variables for the market. And then investors had a full payout model. If my knowledge is not incorrect, I think, you know, the company didn't really have amortizing debt to the extent that DHT has today, and it paid out all of net income. And you know, when you have depreciating assets and non-amortizing debt, at some point you sort of meet a challenge. And then when the financial crisis came in 2008, and you know, asset values were, you know, changing, income was changing, a lot of things were changing. It put the company in a bit of a, you know, rough spot. So they had to raise some capital, they had to change the dividend policy and all of that. And, you know, the company got significantly repriced in the public markets. And in March 2010, then the CEO, since the listing, left the company with immediate effect. So then take a couple of years, you know, sideways or backwards. I met Trygve Munthe, my now retired business partner through many years. We met some 20 years ago, met through some common friends. And both being in shipping, you know, you start to talk about the industry you're working and discussions and, you know, met some other occasions. And we realized quickly that we had some appreciation and ideas about what it takes to run a successful shipping company. We both worked and been CEOs for many other companies, good companies, and watched also from the sidelines things not go so well in some companies. So we sort of shared some core philosophies of what it takes to be successful. Then when the financial crisis came in 2008, you know, I always had it in me that at some point I wanted to do something on my own if I had the opportunity. So Trygve and I started to talk about, you know, if we should do something together, and which we then agreed to in the fall of 2008, I think it was. And then we left our respective jobs in 2009 and set up a small office in Oslo, a very humble office, rented a small you know, space with 2 IKEA desks and, you know, 1 fixed telephone. And we didn't really have a 100-page business plan, but the plan was to look for opportunities that normally comes out of a crisis, like the financial crisis, because, you know, financial markets collapsed, order books for shipping was 50%, so, you know, there's going to be a lot of opportunities, we thought. And we had a bit of savings, and we were willing to sort of deploy that capital. So we looked at one opportunity in 2009. We made a bid for this opportunity. It was a company that was, due for some sort of restructuring with the bank, too much debt and the usual stuff. We didn't get this company on price. There was another bidder that was willing to pay much more, and we were that was okay, because we thought our price would be a good deal. Paying more would not be a good deal. We then entered into discussions with a private equity firm. We had basically put all of that in place. They were willing to back us to build a new company from scratch, and we will be shareholders, and they will provide some additional capital, all that. But this happened at the same time where we saw the stock market notice from DHT that the previous CEO was leaving with immediate effect. So this made us curious because we didn't know DHT really. And so we looked up on the company and we found this company listed on the main board in New York, smallish market cap, had 9 ships in the water, all on fixed contracts to another US listed company, had 1 employee, which was a CFO, and 1 lending bank. And we said, heck, this company is potentially, our company 5 years fast forward. So if we could sort of get involved in this, it could be sort of a great platform to build on. So we took our savings, we bought stock in the open market, and then we wrote a letter to the board, very friendly. We knew some of the board members, and wanted to introduce ourselves as a new prospective management team to run the company. But we also said that we want to build a different company compared to the business it had been, more of a leasing business. Our ambition was to build a traditional ship-owning operating company servicing the industry, i.e. oil companies and refiners. So, obviously we came to agreement. The board was also working, I think, with a headhunter to look for, a management team and whatnot. So we joined the company in the fall of 2010. And started immediately to implement our plan. So the first hire we made was our technical director, and he's still with us. Great guy, I think, super hire, and he's a partner in the business, and so he's with us still. And we started to sort of, grind ourselves the way through all the material in DHT and whatnot. But it took us some 2.5 years to sort of put the company's, I wouldn't say all of history, but some of the stuff we had to sort out behind us. And in particular, OSG, which was the only client of the company at the time, filed for bankruptcy, and some of the cash flow in the company disappeared. So, luckily we anticipated some of the problem this company could get into. So we raised a little bit of capital to ensure the company would still stay alive and, survive such an event. I think in the spring of 2013, there were sort of, all the stuff was behind us. I wouldn't say clean sheet of paper, but we had a company then that was public, didn't have any noise with this prior company. Our balance sheet was sort of okay, but the market cap was small. I think in the summer of 2013, our market cap was 60 million, 60. It's a tiny company. We felt in a way at that time it was an up or out situation. So either we really have to step on it because we were very bullish on the market, or we had to try to take the company private with the few ships that it had. And we decided the former. So in the fall of 2013, with the support of the board, obviously, we then ordered some new ships and we raised capital. We then managed to acquire a couple of 3 distressed ships that were arrested by banks. We ordered another few ships, and then we did a big M&A. We bought in the second quarter of 2014 a privately owned company with 7 VLCCs. So in total of 9 months, we bought 16 VLCCs, which is, and from a 60 million market cap to this, I tell you, this was not easy. It was very, very difficult, but we managed to pull it off, and so it was a super proud moment for the two of us in 2014, having suddenly then a sizable VLCC fleet, and with the acquisition of this company also came a full technical operation, And so we starting to become a fully integrated company. That was our longer term ambition, but it happened, maybe faster than we could ever imagine, right? So we stopped investing then in the fall of 2014 in anticipation of a strong market, and it was sort of going into harvest mood and try to make as much money as we possibly could on then the fleet that had become sizable. We started to pay dividends, with a meaningful order to shareholders. We used excess cash flow to prepay debt, to invest our balance sheet, but stayed sort of quiet for a while. And then in 2017, we felt it was a time again, and we did another stint. We ordered 2 new buildings, but also importantly, we acquired the VLCC fleet of the BW Group, 11 VLCCs. So we bought this fleet from them with the consideration was a mix of cash and stock. Hence, BW became a shareholder in the company, and they're still a shareholder in the company, although percentage-wise smaller than what they were at the get-go of this transaction. So this, of course, built the company over the years, and to now become a force in the VLCC space. And then we've done, smaller acquisitions and some disposals and stuff like that over the years. But these are the sort of 2 big events in, getting really size in the company.
That's an incredible story. I have so many questions, but to start with one, is it any way you can describe how important the partnership was with Trygve and how you functioned as a team? And, would it be possible to do it alone, or do you think that partnership was so critical? Because like you said, this is not a simple journey just based on timing and then everything solves itself. This is hard work.
I think it was, it was a fantastic partnership. He's a super guy, a very good businessman. I think there's many good things with this. I think you need to have a partnership to work like that, where you are equal. You need to possess a couple of things. You need to have, great respect for the person you work with. And you need to also possess a fair amount of generosity so that you can give each other space, at the time. And sometimes that is not so easy, but, but it's part of the things that make it work. And of course, you need to have some, contributions both, but you need the base principles. So how you think this business, what are the success factors? You need to agree on those. I think the other thing is that, sometimes when you are a CEO, you're not always 100% certain that the people that work for you will always tell you the truth. They dare to be honest with you or disagree with you, for instance. When you have a partnership like this, you are on equal footing, and you can have, really, you're confident that there's no nonsense here, right? We're in the same boat together, we put the same amount of money to work, and we are equal. I think in all this process of doing that, and in exchanging ideas and, how to attack sort of the challenges or problems or make things happen, it was very, very good. And I dare suggest, or shouldn't suggest, some people have suggested me that it will be hard to replicate this. Trygve retired now, I guess it's almost 3 years ago. So I always knew that he had an ambition to retire maybe at an earlier age than what I have. So I've been sort of prepared for that. But in this process, also as the company has evolved, right, and developed, we have a very strong management team under us. So in this transition, previously Trygve and I, we were sitting in the same room with desks across each other discussing everything. And I guess we were sort of throwing the balls back to the team when we make decisions on what to do, please help fix this stuff. Now it's maybe more a traditional management structure. So these 3, directors are now part of a management team. They, we all attend the board meetings together, generally. So they are a very capable team. And it's great that they now got the opportunity to take a step up and be sort of really on the management board of a company and being involved in truly running the business. Take part in investment discussions, strategy discussions and stuff like that to a greater extent than maybe what they did in the past. So, every change creates, creates the need to make changes, and this is how we dealt with this. So I think both is now equally important in a way, and there's a time for everything, right? But he's a good guy, and so.
But given this journey and the partnership, you still feel you have a lot of enthusiasm, ambition to keep going because it's in your blood. It's hard to let go, sort of. Is that a fair assessment, or?
Yeah, I really like what I'm doing. I think, I really enjoy running this company, and there's many reasons for that. Obviously, you've had a lot of success, so there's something to be proud of. I think we all experience great support from the key stakeholders in the company. So, our shareholders, our customers, and our lending banks, I think those are sort of the biggest stakeholders in the business. They are very close to the management team. They are truly vested in our strategy and how we execute on this strategy. And, it's fun when things are good, right, and work like this. I also truly enjoy working with all my colleagues. It's a great team. So we have a lot of fun together. And again, we make things work and happen. And there are challenges every day in the business. But I think we managed to, overcome those or fix it and also do a lot of good things. So I'm also a person, I don't think my wife wants me to at home anytime soon. So I have no plans to retire unless somebody else think that I need to retire. That's a different discussion, but
makes sense. So there's a bunch of investors tuning into these conversations, and maybe a bit of a populistic question, but how can they, separate DHT from Frontline, Okeanis, and other players in the market? One thing is, of course, the listing. You're not in the Oslo Stock Exchange and stuff like that, but how do you frame it even if investors give you a call and want to look at crude markets and who they're going to invest in?
Yeah. Of course, this is a recurring question and important if you're going to invest. So all these companies are different, as you say, and I shouldn't say that they're necessarily better or worse. But the structures of the companies and strategies will, of course, behave differently at different times in the market. So first and foremost, we are a pure play company. It's only VLCCs, which is the workhorse of the crude oil market. So about 50% of crude oil, seaborne crude oil transportation is handled by VLCCs. So it is really the most important asset. It also works, for long-haul transportation, all of that. So pure play, that's one. It's a very simple capital or corporate structure. So everything is integrated. There's no private-public relationships. It's not like management owns a management company on the side and charging fees and all that. Everything is integrated. So when you invest in DHT Holdings, DHT Holdings also owns the management companies and everybody's employed in this. So, economics are fully aligned on all fronts. Then if you look at our corporate governance, it's a very high governance standard. And I think sort of neutral reference on that is the Weber scorecard, which is a US consultancy firm started by Michael Weber. He used to be head of transportation, sales side analyst with Wells Fargo. And he started this idea that if he could measure corporate governance, he could also look at returns over time. So in this Weber scorecard, which is coming out every day, every year, we are consistently in the top quartile, and we are the highest ranked of the crude oil tanker companies. So this is sort of a reference for corporate governance and integrity, how the business is run, right, on behalf of the investors. But then on to the key business things. And running a shipping company, to a great extent, is about how you allocate capital. Because it's a very capital-intensive business, there's a lot of money involved. And there are essentially sort of 4 ways to allocate capital. 1, you can invest in ships. 2, you can pay dividends. 3, you can buy back stock. Or 4, you can prepay debt, i.e. more than what is amortized, so to invest in your balance sheet. Those are the 4 sort of areas you allocate the capital. So how a company is doing that and how it's structured to be able to do it over time is the key. And I think DHT, we are put together very well on that. I would like to think that is well thought through, of course. So our dividend policy is to pay out 100% of ordinary net income as quarterly cash dividends. But the reason why we can do that is because we have little debt, and there is a meaningful headroom between the P&L break-even and the cash break-even. Because if you have a shipping company, if you pay out all the cash flow, that's a disastrous decision. That will end in tears at some point. So we have this headroom, which means that every year, despite paying out all of net income, we still generate quite a lot of cash that we can use for the other 3 areas of allocating capital. So if you look at us now over the last, say, the year or so, we have deployed most of the cash flow into our new building program. So it means we have ordered new ships without raising new capital. In December, there was a very soft patch in the stock market where, our share price dropped quite a lot. So we bought back quite a lot of stock, very cheap, below $9. So these are sort of examples of things we can do without hampering the dividend. So we did a thorough analysis on how to structure this and how to, have confidence that we can live with this over time. Because to announce a dividend policy that for some reason has to be changed after 2 years does not build confidence in the market. So I think this model now is now, increasingly being rewarded. We are trading at a premium to NAV, which I think is fair. Because it's not only about the value of the assets in the company. Hopefully, investor will also value the soft parts of the business. The people that work there, the value of customer relationships, of lending bank relationships, and things like this. And that has a value. That's part of creating value in the company. To build up this, I think, is a very clear strategy. And some people in New York at some point told us, say, what's wrong with you guys? You're just doing what you said you're going to do. And that gives you a little bit idea about maybe what is the experience investors have with other companies. So
that's a fascinating breakdown. But this model also provides excellent discipline as well. That makes you
Indeed.
do the right decision, because maybe that's the hard part as well. That you are,
To stay disciplined, yes. I mean, history is full of people and companies that got carried away, right? And it's shipping in at times you can be very excited about things, but when you have a structure and plan how to do things, and sometimes you have to tune a little bit because maybe circumstances are a bit different, but broadly the basics are the pillars are in place and how to do things, and we will stick to our knitting as they say in Britain. So
is that also a reason for why it's not a direct competitor, but still, Scorpio Tankers place their money in your company at the stock? Is that also a testament, or is that something else?
Well, at least they said publicly that they respect the company and they think that we are doing the right things. So, I have respect for any investor. Have a choice, right? There's many companies they can put their money into, and they don't need to choose only one company. I think as an investor, if you believe in a certain sector, you want to be invested, it may be wise to pick a couple of 3 horses, right? And so to have.
But is that a testament to have like?
Yeah, I don't know. Of course, we appreciate that, and these guys are very seasoned shipping guys. They've seen the up and downs over the years, so that they trust us with their money. Of course, it's appreciated. But it's like with all our investors. Fidelity is a very big mutual fund in America. They own 15% of DHT. They've been a shareholder with us for many, many years. So that they are sort of supportive, and we speak with them regularly, and they're checking in. That's Svein, just making sure there's no change, right? You still do what you said you're going to do. So, that's a great shareholder. BW is still with us for many years. Dimensional is a big mutual fund, still with us for many years. So there's quite a sort of good stability in the big bulk of the owning of the company. So,
do you have many stories you can't really tell about mergers, acquisitions, Frontline trying to buy you at some point? Are there many stories like that didn't happen but could have made a different story, or just pure speculation?
Of course, Frontline is the main one from 17, right? So in the fall of 16. Unfortunately, we had to take an impairment charge on some of our assets. And I think today, with history later on, different people, accountants and stuff, not internally, maybe that would not have happened, but it happened. And it was a big surprise to the market, and our share price took a big dive, and it created an opportunity for Mr. Fredriksen to build a stake in DHT, which he did. And then, he announced it to the market, which he had, and then he, invited us to have discussions about combining, or essentially them buying us. So, when you're public, your company is essentially for sale 5 days a week. So we, entered into negotiations with them, but it became quite quickly clear that they were not willing to pay a fair price for the company. And we had a strategy whereby we felt we could create superior value to what their plan was at the time. I think if you look at total shareholder return between Frontline and us since 17 to today, if I'm not wrong, I think our total shareholder return is higher than theirs. So I think we did the right thing. But it became a bit, public, the whole thing. Of course, in Norway, John Fredriksen, although he's not a Norwegian citizen, but he's a Norwegian and he's in the papers every day. So it was a lot of publicity. Some people gave us flack that why don't you sell the company? You're just looking for job security. We were not. We were very firm believers that we could create more value, being DHT. So, he sued us first in New York. He lost on all accounts. The judge said, there's no merit in your case. He sued us in Marshall Island. He also lost, and so.
Does that have an impact, or do you just get on with business?
It kept you busy for sure. This was like 24/7, right? The whole thing going on, and so it kept us busy. In a way, in hindsight, it's also a great learning experience, right? And I don't think we did the wrong thing in focusing on staying independent. There's always some small things you could have done differently through this process, but it was a great learning experience about being, in a way, exposed as you can be in the capital markets. So it also, in a way, it enabled us to execute on the opportunity with BW, because that was an opportunity that has sort of softly, I would say, been around for a couple of 3 years. We've been flirting with BW about maybe doing something together, but the stars were not sort of fully aligned. And it so happened in the spring of 17, after sort of the fact that there will be no Frontline business, that we were in position to do this with BW. So we were sort of blamed for bringing him in as a white knight. You can say consequentially maybe he sort of was, but that was not the driver. It was the driver that we wanted to combine forces and build a strong tanker company. So
Interesting. Talking about learning experiences, a lot of people tuning in are young professionals trying to build an interesting shipping career. And I mean, you've given many stories that have so many different lessons, but what do you say to a young professional in shipping, setting out, want to create their own company, maybe in the future, but all the necessary steps? And do you have any principles or reflections you can share that has guided you and been important?
I think there's many things to pick up, but also you have to, person A, person B are also different. So it's hard to give the same advice to everyone. But there's some things. I think one, you have to be curious and keen to learn, right? But I think that will go for most industries. And you need to build relationships with people, because shipping to a large extent is still a people's business, and you can still do handshake deals in this business. And although it has to be maybe documented, but later. But there's a lot of characters, and maybe some of the people you meet when you're young, they will also become big decision makers later on in life, and it will enable you to do exciting stuff together. So building relationships is important. I think another area which I was not sufficiently tuned into when I was young, but I sort of quickly had to, was to try to stay tuned in sort of geopolitics in a way, because it's such an truly international business. So you need to read, and I have kids, right? And my son is now soon to be 32, is in shipping. But for both my kids, I said, you need to subscribe to Financial Times. And I'm not getting paid to promote Financial Times, but I think it's a very good newspaper, and it's relatively neutral, and it covers the entire globe, and it talks about politics and industry and stuff everywhere, and it's very has some of the best journalists on the planet works for this newspaper. So to read that on a daily basis, if you're going to spend money on something, if you go to a coffee shop and buy you a fancy cappuccino, twice a day in a whole year, I think that costs you more money than to subscribe to Financial Times. So that's great, I think, brain food early on, and get tuned into this. You don't need to read everything, but it's a way just to, be alert on how things are sometimes connected. And if you want to be in shipping, you will many times meet and be in need to really try to understand things. What does an election in this country might mean. What does this industry either doing well or doing poorly in this country mean, and what did 20 years ago, what did the boom of China, what is going to mean, stuff like that. So it's going to be a very important tool, I think, in trying to have success in shipping. And I think also you will probably be a more interesting conversation partner with people you do business with, because you are a little bit involved in this and read a bit. So you cannot read everything, but I think it's a great way to start. So
to build on top on that, how about becoming sort of a global citizen? You have lived in different cities. I know you have been in several cities. How important is that as well? It ties into networking, of course, but also it's not necessarily the Norwegian perspective that is the correct answer in all topics around the world.
That's a good point, actually. So I think that there's basically only positives coming out of that. You learn to work and live in another culture, another country. I was part of my career, I was in Singapore. It's a lot of expats and stuff like that, but it is still in Asia. It's still a lot of other things that are very different to living in Europe. So I think that's if those opportunities come about, especially at a young age, grab them. Go and take the opportunity. Don't be scared. Also, when you're young, maybe you don't have all the commitments. I had a young family, so my wife and 2 kids tagged along, which was great. We had it was also very fun. It wasn't a great adventure as a family. But whether you are a young family, or whether you are single or alone, I think if you're given the opportunity to go out to work, abroad for 3 years, 5 years, 10 years, whatever, and maybe do more than one place, it's a great experience in general for life. So that I would not have missed it.
You touched upon Financial Times. We usually ask our guests for favorite books, or is the Financial Times the only thing you have to read?
No. I can choose many things, but I think it's just a great start to try to have a good perspective on things. It's a paper, as I mentioned, that cover many things better than most other sort of newspapers. And then the many fun books. In my business, I think to get a grip on what the oil energy markets is about, I would read the books of Daniel Jørgen. So he has a handful of books, maybe a bit more now. So the first one, I guess, is The Price, and then the most recent one is The New Map. And this talks about energy politics and history and where oil is and why stuff is like it is. And he's a very competent writer, very knowledgeable, and so I think that's a great read. Might be a bit of a heavy read if this is your first read into the space, but if you've been in the business for a few years, this I would recommend. But if you want to have a sort of a bit maybe easier read and maybe even more entertaining read, you should read the book called The World is for Sale. It's written by 2 financial journalists. It's about the commodity trading industry. And, the big names like Vitol, Glencore, Trafigura, Mercuria, all these companies. And goes through their businesses of the, last number of decades and histories and how they've been involved in helping countries. And this is, very entertaining read. It's not a heavy read, but it's a good read. It will give you a little sense of also some of the stuff that goes on in our industry, but also how fun it can be and interesting it can be. So,
great recommendations. So just one more quick question. Who has been sort of, some of the most impressive shipping companies, peers, recent years? Just interesting because you obviously base them from what this market is all about.
Yeah.
DHT has been mentioned several times.
That's it? Okay. That's appreciated. So, as it's hard. It's not hard maybe to pick some companies, but it can be unfair of the companies that I don't pick. So I don't mean to exclude people, but I think there's some people I've been watching, either over time or recently that impressed me. I used to work for the BW Group many years ago, or started with their predecessor, Worldwide Shipping. Andreas Sohmen-Pao, who's now sort of is the chairman of the group and the owner, he's the 3rd generation. He's a very impressive gentleman, right? Very, very smart. he's very tuned into many things. He has significant capacity to follow many things at the same time. So I think he's also very rational, and he has built some successful companies, through the portfolios in his group. So the shipping portfolio that he sort of took over some 20 plus years ago, 25 maybe, was much smaller than what it is today. So it's a significant track record. So very impressive gentleman. I think another company also that has impressed me is the Angelicoussis group, the Greek family, which I guess must be the biggest Greek ship owner now. It's currently run by Maria Angelicoussis, whom I don't know, but I just know from sort of afar from the outside. So she, took over the business under, unfortunate circumstances. Her father passed away some years ago at, I think too young age. I don't know exactly, but she must be in her 40s maybe somewhere. But the way she's sort of taken up also as a woman, which is not so easy in shipping, I think, taking charge of the family business, in which she worked for many years, but taking it to the next step and moving on and continuing to develop the business, I think is very impressive. So I know people who know her. I have an acquaintance who work for her. But just looking on that on the outside is very impressive. So
it's a great story and two great examples.
I think so, yes.
Yeah. Time has run so fast, Svein, so I will not take more of your time, but once again, thank you so much for taking the time. It was a privilege to listen to your stories, and hope we can do it again in the future.
Thank you very much for having me. It's been great.